Hello. Today is Friday, June 12, 2026. Here is your daily signal. Saudi Arabia, the UAE, and their Gulf neighbors are ramping up their dominance in artificial intelligence investment, according to Fortune, with competition across the region projected to intensify. Over $2 trillion has been committed to AI-related strategic investments since 2020, as Saudi Arabia aims for AI to contribute 12% of GDP by 2030 and the UAE targets a remarkable 40% by 2031, each pursuing aggressive economic diversification and digital leadership. Chinese technology companies like Huawei and Alibaba have formed substantial partnerships and built data centers across several Gulf states, noticeably altering digital ecosystems. Major projects range from the 5GW UAE USI campus in Abu Dhabi and Microsoft's $15.2 billion commitment in the Emirates, to Saudi Arabia's $5 billion Neom AI factory, altogether set to triple regional data center capacity to 3.3 GW by 2030. The Saudi Public Investment Fund, with heavy backing from entities like UAE's Mubadala, G42, and the Oman Investment Authority, anchors several international equity stakes including SpaceX, xAI, OpenAI, and Anthropic, while Prince Al-Walid bin Tal's Kingdom Holding and Alpha Dhabi Holding further boost the region's firepower. Meanwhile, U.S. giants such as Microsoft, Google, Meta, Oz, and Nvidia jostle with Chinese firms to secure digital and telecom infrastructure deals, particularly in high-profile city-building projects. Recent milestones include the potential $5 billion PIF investment in SpaceX, as its Nasdaq listing values the company at $1.75 trillion, and a $10 billion AI infrastructure venture spearheaded by the Kuwait Investment Authority (KKR) and partners, focused on supporting hyperscalers. Gulf-backed NEO's standout IPO this month reflects a surging appetite for technology equity across the region. In the short term, these investments are expected to generate significant local employment and new tax revenue, as AI data center construction stimulates activity beyond traditional oil sectors. Medium term, the deepening financial ties between U.S. and European tech giants and Gulf governments may give the region greater global digital leverage, especially as capital inflows into data and AI infrastructure raise the stakes in the ongoing U.S.-China rivalry. However, talent shortages and skills bottlenecks threaten the sustainability of these ambitions, prompting calls for stronger policy responses and education reform. The United States just saw solar power leap ahead of coal as its primary source of electricity generation, even as the Associated Press notes pro-coal policies continue in Washington. Solar electricity capacity has been surging, with the Energy Information Administration reporting a 24% year-over-year jump in 2023, while coal's share has dropped from about 50% 2 decades ago to just 16% by last year. This shift comes amid federal incentives like those in the Inflation Reduction Act, which have fast-tracked investments in renewables. Coal legacy states like West Virginia and Kentucky now face economic pressure as solar expands into regions long dominated by coal, highlighting a profound national transition. Oversight comes from the U.S. Department of Energy, while market leaders like NextEra Energy and First Solar have driven the ramp up in solar construction. Senator Joe Manchin continues to advocate for coal interests, while the United Mine Workers of America represent workers navigating this energy shock. According to Bloomberg, in the first half of 2026, U.S. solar output overtook coal for the first time, hitting 245 terawatt-hours, outpacing coal's projected 170 gigawatts in installed capacity this year. As a result, coal-dependent regions could see rapid job losses, prompting fresh calls for federal and state workforce retraining support. The acceleration of coal plant closures is expected to drive urgent investment in grid modernization and battery storage, even as political tensions sharpen between federal green energy priorities and local coal advocacy. In the medium term, the investment boom in solar could invigorate U.S. supply chains, especially domestic solar panel manufacturing. Next, moving to innovation in the world of startup finance. Venture capital investment is getting a shakeup as non-traditional models like the Sabertooth VC approach demonstrate their impact, as covered by TechCrunch. Traditionally, venture capital funds invest in high-growth startups through direct equity, but the Sabertooth VC model blends revenue sharing and convertible financial instruments, promising founders more flexibility and less dilution. This addresses a long-standing funding gap faced by early-stage companies and has gained momentum since 2023 as startups seek alternatives to rigid, equity-heavy capital, Sabertooth Capital, at the center of this movement, works with a new breed of founders particularly in fintech and SaaS, while institutional backers like Plug and Play Tech Center provide fresh infrastructure for experimentation. Even big-name firms like Sequoia Capital are taking notice as alternative, flexible VC approaches gain traction. In the near term, startups using the Sabertooth model are finding quicker routes to crucial funding rounds with more control over their company's destiny. As this approach becomes more normalized, both investors and entrepreneurs may need to rethink risk management, and regulatory frameworks may soon have to adapt to these new hybrid venture structures. Over time, the rise of flexible VC will likely reshape the competitive balance in startup funding, making the traditional venture fund landscape much more dynamic. Now, onto the markets. International markets advanced, with Taiwan's EWT up over 8% month-on-month and the United Arab Emirates ETF UAE gaining 3.8% today. Key movers included strong momentum in Spain EWP and Italy EWI, while France's EWQ added 3.3% over the month. The S&P 500 index SPY was modestly higher today, rising 0.54% with financial stocks XLF outperforming, up 1.4% and supported by broad sector gains. Semiconductors stocks led U.S. sectors for the month, gaining over 12%. Among commodities, lithium LIT rebounded 2% today but remains down 8% for the month, while oil USO continued to decline, fallen 2.6% today. In stock movers, Space Exploration Technologies SPCX surged over 648% and IBA jumped 332%, while Pop Culture Group CPOP fell nearly 80% and Virgin Galactic SPCE declined almost 32%. AMD outperformed among technology favorites, finishing up 4.7% daily and up 15% for the month, while Adobe IBA dropped 6.8% today. That's it for today. You can find more news and details on our website. Goodbye.